Welcome back to the channel, Crypto Trend Trader with another morning market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's take a quick look at the 10-year Treasury Yield. We've been looking at it for some time. We basically topped out exactly where we said. Let's go ahead and maximize this. Topped out exactly where we said. Right up here, we got that burst up to 1.61, which was the measured move of the channel that we've been operating inside of. After we got that burst, actually before we got that burst, I said exactly what I thought was going to happen. We were going to consolidate around that 6.8 level and then come back down, retest the breakout. So we essentially have that resistance line here in red that's making up the top of the channel. We burst out, get the measure move, we come back down, we retest that for support. So we have a break, a confirmation of what was resistance as support. So now it's an SR flip, and then we're looking for a continuation. The continuation obviously would take us, continuing to the upside from where we are currently at. And our next target would be the 786. 786 is all the way up here at 2.08%. Obviously, we had spoken about 1.5 being the key level, as that is the S&P's dividend. So essentially, people start to de-risk from the S&P and away from stocks and start betting on the stability of the government rather than the stability of the equities markets, if the yield is similar or the same, which the opposite effect happens when the yields are extremely low. People will diversify into more risky assets to try to make those yields, which is why we saw this burst in speculative assets and whatnot, is people are trying to fight against inflation. I want to get into that, more of a macro view on that before we get out of here today, but I'm going to keep this one relatively short. So next, and something else that we've been watching for quite some time now, we're going to take a look at the DXY. DXY, obviously, similar situation, but we have a descending channel, found support multiple times in the middle, came up to the top of the channel here in orange, got the breakout, retest, continuation, got a lower high, continuation on the micro, came back down, retested again. But once again, we found this as support. So as long as we don't take out the low down here on a daily close below 89.3, this still looks good to me. Still looks like a confirmed breakout. We are just consolidating essentially on top of the channel. So we're basically just finding support over and over again on that same area. So as long as we don't take out that all-time, low for this trend, or that previous low for the trend, I would expect us to get that move up. Next target being 92.8. 93 up here at those 200 moving averages, which point in time we can start to get this massive measured move that we've been paying attention to all the way back to that 95. And keep in mind, this has nothing to do with the amount of dollars that the U.S. is printing, the amount of dollars. It has to do with the amount of dollars in relation to the other currencies in the basket, primarily being the euro. So if we print $1.9 trillion, let's say, and then other countries print relatively the same amount or more, the dollar will still strengthen. It's only when the dollar is being printed faster than everything else that the dollar weakens in respect respectively to the other currencies in the basket. So keep in mind, there are other countries out there printing just as fast or faster. So that's why you would see the dollar strengthen in relation to those countries. And then vice versa, certain other countries are printing less. So you're going to see their currencies strengthen in comparison to the dollar, which the dollar being weak is good for United States exports. The dollar being strong is bad for United States imports. So the other way around. If the dollar is weak, you can buy less imports, but more people buy your exports. If the dollar is strong in relation to something else, then it's harder for other people to buy our stuff, but it's easy for us to buy more of their stuff. So in many ways, the benefit of the economy versus the benefit of the actual currency are inverse, because it benefits the economy to have a weak dollar. It benefits the people who are consuming, the consumers, to have a strong dollar, because you can buy more if the dollar is strong, but we as a country, the economy sells more if the dollar is weak internationally. So that's what we're paying attention to, and that's why that is so relevant and so important. Let's take a quick look at the S&P. Basically, just looking at the same situation. We got that sell-off, came back down to the 50-55. Are we going to get a situation like this where we continue to the upside, or is this going to be another lower high? It's because we have a high here, we have a lower high, we have potentially another lower high. Even if this comes back up here but does not take out the all-time high right here, it would still be a high, then a lower high, at which point in time we would expect that move down to the 89, around 370. Market showed a lot of strength. Yesterday coming into the new week, and immediately are showing weakness once again. We're showing divergence on multiple markets. Nothing has changed for me overall. I think that things are starting to crumble a little bit. So here we have Bitcoin. Obviously, not sure why it's on that. All right, so we have Bitcoin on the daily. Obviously, we put in that high, sold off fairly violently, almost got the 8 and 21 cross that we were talking about, got a powerful burst back up, closed the futures gap over the weekend. We got that burst basically on Sunday night, which that's one of the most reliable plays you can play in these markets. It's not financial advice, but if you see a gap from where, the CME closed and, spot price is at coming into Sunday morning or Sunday evening, it's like 95% chance that that gap will get closed before the opening. So if CME closed higher and we've been selling off all weekend, taking a long on like Saturday or Sunday morning is almost always profitable because price will burst back up to it, in the same way that, if it's the opposite way, if we pumped all weekend and CME is below it, there's a possibility CME just gaps up and then we sell back off and close it after CME is open. But almost always what happens is we pump up and then we sell back off and then open, CME and spot open the same. Otherwise, there's just massive amounts of arbitrage available, and these markets are becoming more and more efficient. So arbitrage is becoming less and less, useful because there's bots and arbitrage, set up in the market to immediately exploit that. So, the likelihood of that continuing is extremely high as these markets continue to develop and continue to mature. So, what I'm expecting right now is, basically we have a situation like this. We consolidate long enough on top of it, we get continuation. I'm starting to see quite a bit of weakness in a lot of these various markets. The fact that we have it's good that we have big buyers coming in. It's good that we have, corporations coming in. It's good that we have massive, like Tesla's buying 1.4 billion, stuff like that. But when you have a single entity trying to prop up a market like Michael Saylor, out here nonstop, buying massive amounts of Bitcoin, and now he's underwater in positions and keeps buying, and announces it publicly. That is Ponzi scheme type stuff. People normally, when they make large acquisitions, you don't hear Warren Buffett coming out right after he makes acquisition of a company telling everyone that he has purchased a ton of that company. It's the opposite. You usually find out a month later, when they have to reveal their purchases or their trades or whatever. Sometimes a quarter later. In a Ponzi scheme is when you buy something and then you tell everybody else about it because you want them to buy it too, so that your stuff goes up in value. So Bitcoin is been around for 12 years, and there is a massive amount of money in it, and there are massive whales in it, and somebody like Michael Saylor is just a guppy swimming in a sea full of whales, and he keeps gobbling up all this Bitcoin in this little feeding frenzy of his. But he's going to realize very soon at some point in time that he is in fact just a guppy, and that he alone cannot continue this marketing campaign and pump this up. So when the market decides it's done, and I'm not saying that it is, I am bullish on Bitcoin in the long term, but when this market decides it's done, all the Michael Saylor in the world and all the borrowed money and deployed capital he wants to put into this thing is not going to pump it up if the whales, the people who actually have Bitcoin, who have mined Bitcoin, who have massive piles of it, decide they want to sell. So just keep that in mind. So the more he comes out and says how much Bitcoin he bought, and he bought the dip and this, that, and the other, the more it just feels more and more like a Ponzi scheme getting ready to burst, or a bubble getting ready to burst. So be very careful in these markets. Let's pay attention to the weekly chart on Bitcoin. So let's look at our previous two tops right here and what they look like. We had parabolic trend coming into it, and then we had a massive red candle back to the 8, and then we got an indecision candle. We got a bullish candle, put in a lower high, and then we got, a consolidative downtrend. Same thing. Parabolic high, consolidation, parabolic, sell off back to the 8, and then immediately bullish engulfing candle, continued up, show indecision with this like shooting star doji at the top right here, consolidation, sell off, kind of hold, and then we break down from it. So what I'm paying attention to now is this going to be another one of these situations here where we just consolidate down, find support on the 8, and then get parabolic continuation? Or is this going to be one of the ones where we start to show weakness and sell back off? So we're showing some strength coming in right here, but what we need to do is take out this all-time high again. So we are roughly like, $10,000 below the all-time high. So we're down over, roughly about 20% from the all-time high and just consolidating. So what I expect is another situation like this, but what I'm paying attention to is a potential situation like this where we're actually topping out. So, every time that we topped out in these markets, and including some of the times when we didn't, like this, we get the bullish control zone, we get the hard sell, okay, and then we test the 8 or 21. We get the bullish control zone, we get the hard sell, and then massive sell-off. We get the bullish control zone, we get the hard sell, and then massive sell-off, okay? So now here we have a situation like this where we got the bullish control, hard sell, but it was just a little guy like this. Now we have a big situation like this where we got the bullish control zone, we got a hard sell inside that control zone, and then continue to rally, which that's why you have to leave the bullish control zone before you take this as a valid sell signal, for a market top. So we were able to continue on inside the bullish control zone, but we are still below. The 8 is still below, or I'm sorry, the blue is still below the pink right here. So we are, in a situation where we already have the negative cross on the stochastics, came back up and got rejected, and now it's in a downtrend. Both these have rolled over and they're going down, and we're getting ready to exit this bullish control zone. We're very, very close to exiting it on the weekly. So now we have multiple histograms right here, 2 reds and that hard sell, and then we got basically like what I consider to be like a massive stop hunt, a nice burst back to the upside, one more big push, and then we showed weakness again. Okay, so we have 2 levels of weakness right here and then 3 strengths, and now here we have another weakness printed, and now we have 1 strength. So if all of a sudden this flips back over and shows weakness again, it's going to look extremely weak. Or if we even close this week bullish and show strength, and then we show weakness again, it's going to start looking like a trend change, because we'll see a bunch of greens with an occasional pink in here, and then we start to see like a little more pink showing up, and then less green, and then a bunch of pink. We see a bunch of greens and a little bit of pink, and then we see, next in this area, we see more greens, and then we see more pink starting to show up, and that's what we're paying attention for. Are we going to start seeing more pink show up than greens? Because that's what's really going to endanger this trend, at which point in time, a retest of the 21 and the parabolic SAR is going to look likely, and that's all the way down at 32,000. And remember, we could still drop 40% in this uptrend, and it would still look overall bullish to me, as that has happened repeatedly throughout Bitcoin's history. So once again, now let's switch over to the monthly and pay attention to what we're looking at the monthly. What did it look like when the monthly topped out previously? Massive green candle, parabolic, closes at the all-time high, and then starts to immediately sell off, and that's it, downtrend. Massive parabolic up, we get a wick at the top, we get a close lower than the wick, and then we get one more attempt to push back up to a lower high on the wicks right here, and then we get a bearish engulfing candle, and then we try to save it, and then we get continuation to a downtrend. So here we are, another big push up. Actually, let's look at this one. Big push up, leave a nice size wick, about 50% of the candle on top right here, and then, basically just start to sell off after multiple rejections. So what we want to pay attention to right now is this monthly candle going to leave behind a wick and start going negative? Because if it leaves behind a wick at the top and starts going negative, that's going to look like, to me, like this trend is overall topping out. And you'll see we got a very strong knife stand up way higher than everything else in this relative area since our previous top back here at the all-time high back in 20,000. So here we have another massive knife sticking up out of the top here that we're paying attention to. We're in the bullish control zone. We are dangerously close to exiting the bullish control zone. We're up here still. I shouldn't say dangerously close. We're at 87 still. It's at 80. So we could easily still dance around in here, show a little weakness before we sell off out of there. But that's what we're really paying attention to on a monthly scale, because once we get these monthly, crosses to the downside, these monthly exits of the bullish control zone, those last for a year. And everyone is going based on previous times, how long the bull run lasts, etc. We could easily get a situation like this where we have a massive parabolic move, a long multi-month consolidation pattern, 1, 2, 3, 4, 5, and then 6-month we take out the all-time high. We just put in an all-time high, so we could get a 6-month consolidation right here and then get a continuation to 100,000, 200,000, 300,000 easily and still be inside of this halving cycle. This one, we did the opposite. We just had one long parabolic bull trend and then sold off and consolidated, and then went sideways, for an even longer period of time. So we are very close, in my opinion, to looking like we're at least putting in a micro top or potentially a macro top on this trend overall for this cycle. So I'm definitely paying close attention to that. I don't see anyone else paying attention to it. I don't see anyone else like having realistic views on what could be potentially happening in this market. Keep in mind that as these markets start to show weakness, it's going to correspond the traditional markets and also crypto markets. So if we get a massive sell-off in traditional markets, we're going to get an equally or exponentially greater sell-off in these crypto markets, and especially so in altcoins, as they do not do well in overall downtrends. They can do extremely well in uptrends. They can do equally well in sideways consolidations or weak uptrends, but in strong downtrends, they get absolutely decimated. Keep in mind, Ethereum went from, like 1,400 last bull cycle down to like $80, which is where I made most of my purchases, in the $80 range. Now Ethereum topped out at $20,000 and, has sold off back down. It's currently at like $16,000. So it's just hanging out basically down like 20 to 25%. And, depending on what exchange you were looking at, it showed quite a bit of weakness with like a 30 to 40, even in Kraken's case, that was supposed to be like a matching engine issue, but it was like a 66% sell off. That's absolute decimation, especially in like a single candle. So, paying close attention to that. Now, what I want to talk about is the inflation-deflation situation. Everybody is extremely worried about inflation. The Fed is talking nonstop about inflation. People are seeing inflation in things like now gas prices, food at the grocery market, all that type of stuff. There are multiple kinds of inflation. There is inflation like on the macro where everything costs more money and your dollars or your currency is weaker. There's inflation on like the micro where like certain sectors or certain parts like it's harder to get steak or people are buying it up like all the water. So there's inflation in water prices, and then there's everything inflating. Technology is overall deflationary. So the idea is that basically technology causes deflation over time. So we've been in this nonstop like inflationary like economic boom, for the last like 10, 20, 30 years. Where, everything has been growing, and we've been growing at an exponentially faster pace than technology deflates. But now we are, basically at like an industrial, like technological revolution where things like machines and technology are actually like deflating away like jobs. Like if we have a bunch of these trucks that can drive now, all of a sudden we don't need truck drivers. If we have, the internet where people can learn from the smartest and most educated people in the world, we don't need like shitty teachers. If we have all these different things, you don't need now a video camera, a regular camera, a recorder device, a notepad, a telephone. All these things are one thing now. So while you see the price of like your iPhone going up, you now have to keep in mind that iPhone serves the purpose of 10 or 20 or 50 or 100 different devices, because now it has the compass and the phone and the microphone and the camera and all that stuff inside it. So overall, it's deflationary. So the Fed has been warning everybody about inflation and saying we're going to let inflation run hot. Well, the inflation is going to do whatever the inflation wants to do. The Fed has very little they can do about it. What the Fed is doing right now is they are stopping deflation. There is a massive amount of deflation happening right now. When the GDP of a country goes down or the entire world goes down, that is deflationary. We were inflated to a very high level and gross domestic product was high, and now the air is coming out of that gross domestic product. It's going lower or increasing at a lesser rate. Therefore, we have deflation. So the Fed is talking about, inflation, we got to worry about inflation. We're going to let inflation run hot. But really what they're saying is we're trying to stop deflation by printing all this money and giving it to everyone because we don't want to go into an economic downturn, which is in many cases unavoidable. In the past, they've been able to avoid it, but this is a different situation, and I'm not sure that it's going to work this time. So we have a deflationary environment where everyone is worried about inflation. So we should be looking left at deflation. which is currently taking place. People are losing their jobs. Companies are buying back their own stocks instead of investing in new innovation. New company, like, new intelligent people are getting gobbled up by, I hate that term too. They're getting, acquired by big companies and then just put on the back burner and paid like mediocre salaries to not create innovation because they don't want them competing with these big companies. So the problem is that what happens is we stop developing as a country, stop developing as a world, stop developing as a race. Basically, like, we get a deflationary environment on innovation. So when you have an inflationary environment, when you have innovation taking place, you have growth, you have new inventions, you have all kinds of different things. That's inflationary overall. It creates jobs, it creates industries, everything goes up, and therefore you have a good environment, a healthy environment. What's happening right now is the opposite. We are having essentially like deflationary environments take place, and we're trying to fight it with things like stock buybacks. You don't want your stock to go down, so instead of giving people dividends, which is what you should do when you have excess money on your balance sheet but you can't find anywhere to deploy it, such as innovation or growth, you then just buy back your own stocks. So you prop up the price with your balance sheet, pull back, essentially like undo the purpose of going public. You go public to get more money so that you can continue to grow your company, and then other people get to share in the gains with you. Buying back your own stocks is the opposite. You're saying there's nowhere good to deploy capital right now because everything's inflated, so we're going to buy back our own stock, therefore we benefit ourselves. What you should do is not buy back your own stock. If you have excess cash on your balance sheet, you should deploy it using dividends and give it back to the people that are investors in the company and continue to grow the company. But it's the opposite. They don't grow the company. They just buy back their stocks. So that's the problem right now. That's, again, deflationary. Lack of innovation or stock buybacks or money just sitting on people's balance sheets because everything's overvalued is deflationary. The environment right now is deflationary. Factories are closing down. Businesses are going under. Jobs are being lost. We don't need as many teachers because there's less people in school now. We don't need as many teachers because people can learn on the internet. More people are homeschooling their kids. So the majority of these new jobs and this stimulation in like growth and, GDP that's getting funneled back out and creation is coming from like government positions. Well, the government doesn't benefit anything. The government is essentially a tumor on the economy. The economy makes money, generates money, and then pays money to the government, who then deploys that capital horribly into jobs and regulation and whatnot. So they tax your money away from the economy, and then they use that money to regulate it to try to keep it a fair space. Well, now we have a corrupt tumor on society that's essentially growing while the rest of the society, the economy, is decreasing. So we have a deflationary economy, we have a inflationary government. That's absolutely horrible. So soon we're going to have 50% economy and 50% government. They obviously are running massive deficits, which normally if you were spending more money than you were making and there was an economic downturn, you would do the opposite. You would decrease the government so that you have less of a deficit, you have less spending, therefore you can balance your balance sheet again, and then you get back ahead. Instead, we're doing the opposite. We're just creating more money and then printing that and then just servicing our debt. So we're essentially just multi-inflating this bubble. Everyone is extremely worried about inflation, but the only thing that's inflating is the bubble. The actual economy is deflating. People are talking about, American economy is doing great. They're out of touch with it. Go look around. Look at what the economy looked like a couple of years ago. Look at what it looks like now. There's more closed down businesses. There's less people out on the streets. Overall, prices on things that you don't need are extremely low, and prices of things that you do need are extremely high. Let's talk about supply and demand. Okay, if we're producing less stuff, and there's still the same amount of people to buy that stuff because you're giving people money to buy the stuff they need and pay their bills and whatnot, and there's less stuff, it's going to cause microinflation in the stuff that people need. But people are cautious now. They're worried. They're afraid of the future, so they're not buying stuff that they don't need. So you see deflation in those assets or the overall economy, while you see inflation in necessities. So you have a lack of supply. You have excess amounts of money being given to people to help them service their debts and service their bills. And then you have a lack of that supply. So there's more money going after those same goods. That's why you're seeing like speculative bubbles in real estate, in stock market, in, necessities that you need like food. But we're not seeing that in other things, other non-useful asset classes that have no limited no limited amounts or limited supplies or whatever. That's why crypto is exploding. That's why stock market's exploding. That's why real estate's exploding. People are trying to deploy their cash because they're afraid of this inflation that the Fed is telling everyone's going to come. But in all actuality, what's really happening is we're in a deflationary environment, and the Fed is trying to fight it by tricking people into thinking there's inflation. Hurry up and go spend your money now because everything's going to be more expensive in the future. Well, if they're wrong, if they fail their mission to create inflation, it's going to be the opposite. All these things that everybody rushed out to buy are now going to start tanking in value, and we're going to get a massive crash, and then we're going to get the deflationary environment reveals itself to the world and says, haha, I'm here. I've been here the whole time. And everybody's going to be like, oh my God, I can't believe I didn't see it coming. Well, you heard it right here from this guy. It's been going on. It's going to continue going on. And unless something fundamentally changes, it's going to keep going. We need actual infrastructure. We need actual jobs. We need to actually create things, manufacture things, innovate. We need to grow the economy, the United States economy, the world economy, and everything. And that is not taking place. We are essentially just printing money and giving it to people to sustain their debt, which is we have zombie corporations, and now we have zombie consumers. Neither one of those things is healthy and is actually horrible for us in the long term. So what we need is not infrastructure packages, which is more government spending and government jobs and everything. We need deregulation and allow people to actually have businesses and create things and innovate and go back to being an actual economy again. Because if that doesn't happen, it's going to be a depression. And that's what it's looking like more and more. We're getting already deflation, and now the inflation is becoming less and less prevalent in these assets. Things are starting to top out. And when the waterfall starts to happen, it's going to just pour straight down, and we're going to see economic devastation we have never seen before. So we need to be very careful. Also, I want to talk about the fake numbers that everyone's seeing. They keep talking about how, Americans' income has grown to, the highest level in years, or it's up 30%. That's not income. If you just give people money, it's not income. All the little programs and everything that they do is not income, because you're essentially just trying to prop up the system by giving people money to service their debt. That's not real income. Real income is when you go out to a job, you earn that money, you build something, you create something, and then you then take that money and deploy it into useful things, not just servicing debt. You're growing. That's growth. That's economic boom. That's not what's happening right now. Right now, we are just propping up a fake economy. We are propping up consumers that can't afford their bills by saying you don't have to pay your rent. So they say, okay, Americans have more money in the bank right now. The saving rate before was 8%, and now the saving rate's 25%. So we're just giving people this money, and they're just saving it. Well, the velocity of money is dead. No one's spending it because they don't know when their next paycheck's going to come. They don't know if they're going to lose their job. They don't know if the government's going to send them another stimulus. So they get cautious. They start to become more introverted and less extroverted, spending out, going out. Not to mention you can't because of everything going on. So think about that now. All of a sudden you have this money. Why is there so much extra money in banks? Why are people saving so much money all of a sudden? They're making more money. That's why. No, it's because they're not paying their bills. You create all these moratoriums where they don't have to pay their student loans. They don't have to pay their rent. They don't have to pay their, car payments or house payments or whatever it is. So they have that money in the bank for when they do have to do it. They don't just keep paying it, not having to. They take advantage of the situation, and they keep that money as a savings, a little nest egg, just in case all of a sudden they lose their job, just in case all of a sudden the government cuts out all these plans and everything. And then we see the true revelation of what's going on. So be very careful when you see these statistics, because they're all fake. It's all fake. It's all skewed. Everyone is being tricked into thinking that there's a massive inflation event taking place, but there is not. There is not an inflation event taking place. If people were actually worried about inflation, gold and silver would be doing well right now. They're not. They're not worried about inflation because it's not happening. It's a deflationary environment, and we are seeing deflation take place firsthand. So let's take a look at what's going on with silver here. We've been talking about this for some time. Obviously now we have broken down on the daily. We have lost the 8 and 21 trend. As soon as we broke down from that daily trend, we got the 8 and 21 cross. We came back up, attempted to retest it. We also broke down from this support line, this blue support line that has been holding up price since November of last year. We had multiple touches on it, attempted to break to the upside multiple times, failed, and now we have broken down from it. Now we're expecting to get the measure move. The measure move would be of this triangle that channel, triangle, whatever you want to call this situation. You could easily just put a deal like that in there and just call it a channel. Regardless, the measure move of this would be down here to that 22.87 range. Remember, the top of our range was $30. The bottom of our range is that 22.50. So we have been oscillating inside this channel. So I would expect us to come back down to the bottom of it. And then if that breaks, we need to actually be worried. But, obviously the silver short has, silver squeeze has failed. This whole situation everybody was talking about, there's no more silver, you got to buy the silver. People were paying like $12 premiums for stuff, and now it's back down to like, 12 for big, eagles, 7, 8, 9 for other stuff. Now it's down to 5. Soon it will be down to 3. We'll have to see what happens long term. But, gold is still operating inside this channel. We did exactly what I said. We had that support down here. We broke down from the support. We got that capitulation event. We almost hit the measure move. I had the measure move coming down to low 1700s, high 1600s. Our low down here came in at 1707. So as far as I'm concerned, we hit that measure move. We came down here. We're almost down to the bottom of the channel. We are below the 377 on the daily. We are coming close to the 528. So it's not unrealistic to think that 1670 is going to soon be a target. Pay attention to what I've been saying here, because, this is exactly playing out exactly like it happened. We're now retesting some of this previous resistance turn support. We broke down from that key level. There was the SR flip right here. So, if we get the measure move of this entire like triangle or this entire situation, it's going to start looking like we're going to come down to these other key fib levels. We had specifically spoken about these targets for a reason. The next main target down here to the downside is at 1600, followed by, 1475, followed by 1364. In an inflationary environment, do I think we get down there? Not necessarily. In a deflationary environment, do I think we get down there? Yeah, probably, because deflation is not good for gold. Inflation is good for gold. So that is our 382. We broke down from the 236 of the fib channel. So from our high to the 236, that was that key support we lost. Now our next one is the 382. We're going to oscillate our side here, but our next target for gold is 1600. The 0.5 for that massive move is 1474, and then of course the 618 is going to be 1358. Do I think we're going to get that on that far? No, probably not. Is it possible? Yes. Set these targets ahead of time, ladder into buys along the way down, if you choose to do so. Me personally, I like to look for strength and then buy into strength rather than trying to buy like the absolute bottom of moves. But it's not the same scalping a physical asset like gold as it is like scalping a stock or a crypto or something like that. So there you have it. Keeping it relatively short for today. Paying attention to the weakness that we're seeing across all markets. We did get a nice pop there on Monday, but until we start taking out the highs again and moving up, as far as I'm concerned, these trends are in jeopardy, and we need to pay close attention to what's happening with them. And this is going to be a stock pickers market in the same way that it's going to be a crypto pickers market soon. We're going to see relief rallies on stuff, but what's making all-time highs right now? Pay attention to that. What is making all-time highs? What's showing actual strength? Because that's where money is going to start consolidating. It's like musical chairs. As things get weaker, they pull those chairs, and then everybody consolidates into what is strong. So, there you have it for today. Crypto Trend Trader with a morning market update. A little bit of the, macro view, micro view, a little talk about inflation, deflation, all that good stuff as well. So, Crypto Trend Trader, and make sure you like and subscribe too. And I'm out of here.